Bulls and Bears, it is Sunday, May 1st, 2022. Welcome to the month of May. And as soon as I hit record, there's a fly coming around here. I'm sorry. All right, I'm back. Sorry about that. So I've got my no headset today. I think I've got my mic set up. Some people were saying I had a noise, a sound, kind of a hissing noise. It was actually the fan from my laptop, which I'm working on getting a new laptop. Well, I've got this mic set very far off to the left. Hopefully you can hear me okay. But let's talk about what's happened with the economy. The economy is entering the next stage. The economic collapse is progressing now. Up until now, we've seen a collapse in our purchasing power because of all the rising prices, rising cost of living, and the markets were going up along with the cost of living up until recently. The Fed is pulling back their support, and now we're seeing major corrections in the stock market and some crashes and actually some big stocks. Let's talk about what's happening with Netflix. Now, we talked about this a couple weeks ago, but there is even bigger drops and bigger things ahead, bad things ahead. Take a look at this. And we'll just bring up a 1-year chart here to begin with. And we're right at about $190 per share. But look at the peak. We were up, this stock was up at about 680. Let me see if I can find the peak here. Over 690 at one point. From 690 less than a year ago, we're talking just at the end of last year, 6 months ago, to 190. So let's take a look at 6 months here. So it's down 72% in 6 months. And we've been talking about this for years, but here is just another piece of evidence pointing to that these markets are completely dependent on Fed stimulus and low interest rates. The Fed's talking about raising rates. We've already had some minor rate increases, but they're talking about more rate increases. The balance sheet is not exploding higher. It's actually leveling off. The Fed is pulling back some of the support. And here is the result. Now, of course, they're going to blame this on other things. They're going to say economic uncertainty, the war, inflation. Well, why just in the past 6 months? We've been talking about inflation now for a couple years or more, the cost of living going up, your purchasing power going down, the collapse of your purchasing power is what we like to call it here, which is the first phase of the economic collapse. Now, the second phase, the way it's looking so far, it's going to be falling prices. Now, anything could happen. The money printers could come back in and change all this in an instant. Remember, a manipulated market, the click of a mouse, they can bring these markets back up to all-time highs. They could also stop the support and markets will plunge. So which way are the controllers going to push these markets? I mean, we'll have to see, but I'd be very cautious. You lose 70% in a stock like Netflix. People that bought at the top of that were all in. There are people that go all in because they thought that the markets could only go up. They don't understand the manipulation. When it's manipulated, anything goes, anything can happen. And that's why you have to be very, very risk alert. You know, you got to be offensive if you want to make money in these markets, but you'll also have to be defensive. That's why you keep some cash on the side for better buying opportunities. Now, I'm not saying to go out and buy Netflix. There are many people saying, hey, buy the dip. Other people say, hey, there's a lot of bad stuff going on at the company that we're staying away from that stock completely. But here's what I think. I think people are pulling back on their spending for non-essentials and entertainment items. We've been talking about this for a long time as well. Well, now the chickens have come home to roost in this stock in particular. What do you think? Do you think people are pulling back on their spending? Netflix, for example, lost subscribers. Let me take a look at how many they lost. We'll just look at this Times article right here. Netflix lost 200,000 subscribers. So what do we think about this? Is this just people leaving Netflix for other streaming platforms? Or are people in such a crunch, a cash crunch, they're financially strapped, the rising cost of living, everything else, are they cutting back on these unnecessary, non-essential expenses, entertainment items like Netflix? Please let me know what you think down below. Now, I know at least a few of you down in the comments I've read, you say, hey, JJ, no, it's because of the war, it's because of the Netflix lost all these subscribers over in Europe because of what's happening. Well, look at the stock. The stock's been plummeting or at least declining for much longer than just the war. What was that, early March when all that started going down over in Europe? But the stock's been on the decline ever since. In fact, the high was back in November. So ever since then, we've seen some pretty big red days in that stock. All right, but that's not just Netflix is not the only stock. Many stocks are down. The indexes as a whole are down. Other individual large cap stocks are also down. Let's take a look at Amazon. Amazon's down. Amazon just fell another 14% and saw its worst day since 2006. Amazing, but not so amazing when you know how things work. Remember, this bull market was Fed driven. It was unprecedented amounts of money printing, buying corporate debt, corporations therefore turning around, buying back their own stock. We saw the insiders started getting out several months ago. And they've been saying they're going to continue to raise interest rates, so expect more red in the markets. Now, could there be a bounce? Of course, they call it a dead cat bounce. Could there be a reversal and the Fed completely does a 180? Absolutely. I mean, I don't trust what the Fed says. They could probably do something completely different next week, next month. Who knows? But I will actually praise the Fed if they keep doing what they're doing. We need to find what prices really are without all of this money printing, the Fed buying everything under the sun, manipulation, buying securities, buying bonds, bailing out the banks, repo, reverse repo. All that needs to end, in my opinion. Now, there's a lot of people left holding the bag that are probably mad at me right now, but I would really like to see some real price discovery to see where the stock market would be without all this support. Where would home prices be without all the support? Where would everything else be with as far as the markets go? Oh, one more thing real quick too. Netflix is also laying people off now after this big loss in subscribers. So now we're seeing layoffs on the uptick with some pretty big companies. All right, still on the topic of layoffs, rising mortgage rates. What have we here? Wells Fargo, layoffs in their home lending division. And we've talked about other companies that have already begun layoffs. And again, Fed-driven, artificially low interest rates created all these jobs that really should not have existed to begin with. So on one hand, you could feel sorry for the people that lost their jobs. Of course, no one wants to see someone lose their job. But when the jobs are only in existence because of an artificial economic boom and madness levels of money printing, what do we say about the people that are losing their jobs? I mean, maybe they'll have to go out and get something that's not just there because of the money printing and the debt creation and all of the manipulation that's going on. And I think we should all get ready. I've been planning for years to lose my job. I happen to work in a little bit of a more stable industry than mortgage lending, but it is in finance. So I could very easily see my job vanish, and I wouldn't be mad. I would just know that I was lucky maybe to have a job to begin with. Maybe it was just the artificial money supply, the money creation that created a lot of these jobs. Next up, Robinhood cutting 9% of its full-time employees. Robinhood, 9% of its employees. What's going on with Robinhood? Well, a few things, but here's the big one. We reported on this couple, maybe 3 reports ago. A lot of traders, a lot of new traders came in, thought they were going to master these markets. Markets only go up. A lot of people got burned. It was $1 billion loss for new traders altogether when we compile all the newbies and people that have been investing for less than just a couple years. So they tried their hand, they got burned. A lot of them, even with markets going up, they still got burned. And that's a big part of it. So people have stopped using it. Now, other things have happened. There's also been some regulatory fines against Robinhood. Robinhood actually just went public, less than a year ago. Now, the CEO is out there saying that this is largely because they're just getting rid of eliminating duplicate roles. Well, why did you have duplicate roles? Duplicate, having a hard time saying that word today, duplicate. Why did you have duplicate roles in the first place, and why are you picking now to finally end these duplicate roles? What else is happening? Well, Bezos lost $13 billion in a matter of hours as Amazon shares slump. Let's take a look at Amazon. Down from a peak at about 3,600. Actually, no, higher. If you go back here, 3,731. This one here, yeah, 3,731 down to 2,485. Now, just year to date, that puts that stock down over 27%. And things are just getting started. We barely raised rates. They barely budged on the rates. I mean, we're still historically at very low rates. And in a rising rate environment, combined with prices at just beyond bubble levels, I mean, everything's higher than what it was during the peak of the previous bubble, the stock market, the housing market, rents, you name it. The high cost of living is going to have people pulling back on spending, combined with high interest rates. It's going to get wild, and some people would even say it's going to get scary. Just be ready for anything. I hope you guys are all well. Thanks, everybody, for being here, for supporting this channel. Talk to you very, very soon. Bye for now. Peace.